Let's see. All right. We're recording. Man, I should have. Now I'm upset because that would have been good for podcast material. Hearing you walk through the Macy's, like everything you're thinking, how you started and how it went
Can do it
wrong. And
again.
nah, when you try to recreate a situation like that, they never turn out exactly the same. But that's fine. That's my stupidity. That was my error. All right. So you
I
aren't.
think we
All right.
beat Macy's enough.
Mm-hmm.
I beat that dead horse. I mean, I know all the members are probably like sick and tired of hearing about my Macy's trade. I just hope that any member that is sick and tired of hearing about my Macy's trade
Uh-huh.
then doesn't go ahead and do the same thing. So I think the bottom line when it comes to trading stocks, and I'm actually going to write an article on my JP Cashflow site on this,
Mm-hmm.
because I really I'm very biased about, yes, I trade stocks, but I only trade the dividend stocks. Even Coca-Cola, I'm in an options trade with it. I'm not planning on owning Coca-Cola, but obviously there's always the risk of assignment. But Coca-Cola is a dividend paying stock. I just never understood why you would want to buy a stock that doesn't pay any kind of dividend as an investment, because your investment plan is flawed in my opinion, because it's like, okay, your investment plan has just one scenario that can play out for a win,
Mm-hmm.
and that is the stock goes up. That's the only scenario that can play out. Whereas with AT&T, it doesn't really matter if my stock goes up, down, or sideways. I make money every quarter on AT&T because it pays a dividend. Coca-Cola, it doesn't matter if it goes up, down, or sideways because it pays a dividend. Apple, it doesn't matter if it goes up, down, or sideways because it pays a dividend. But then you take Facebook, it has to go up.
Yeah.
When you buy it, it's got to go up. And then on the other side of it, it's like, okay, and then what? Now what? Okay, it's gone up. You bought Facebook at 20, let's say you got in at the IPO at $25. Facebook's trading in the $100 range. If you still own it, what is your plan? You've recouped what, 500% of your total invested value of it if you paid $25 for the stock. What are you waiting for? And I can tell you, I'll tell you exactly what people are waiting for. Those stories they hear, if you bought 1,000 shares of Microsoft when it was incepted, you'd be a millionaire today.
Yeah.
That's true. That did happen with Microsoft. But there's no telling that's going to happen with Facebook. And Facebook is a totally different animal than Microsoft, because Microsoft puts out a product that people buy all the time.
That's
Facebook
true.
puts out ads that people buy. You don't have to buy Facebook to get into it. It's a free social media. The only income that's generated is off ads, so totally different animal. So at least I can say that my stock trading strategy, my investment strategy for like AT&T was like what I said, it's just a passive way to produce income, because right now, if my wife doesn't know how to produce income through the stock market, but I've created something that does.
Yeah, that's true.
Right? So, and like I said, yes, every stock can go to zero. The reality of if AT&T does go to zero, well, 41% of cell phone users and internet users will lose service, because that's the sharehold of AT&T on that technology source.
That make me spit out my coffee.
Everyone loves Yahoo Finance, right?
Yeah.
Who owns it? Who owns it?
I don't. They do?
AT&T.
I didn't know that.
Because I have an old SNET. I have an old net. That's my original email.
Oh, I never knew that. Okay.
It's now owned by, it then went to Yahoo, so I do it through Yahoo. Guess who I do it through now? AT&T. I have to log on to the AT&T webpage to log into my email now for ammo13net.net. So the bottom line is, yes, AT&T can fall out. You always have to keep that in mind, that companies can go bankrupt. So true. It does take some work on my part to make sure that that's not happening to my AT&T. But if I owned, same with Apple, if you own Apple, at least you're recouping a dividend, and you're talking about a company that you'd want to keep tabs on it, obviously.
Yeah.
But the chance of Apple going to zero, especially with this whole China trade deal, if you follow that stuff, Apple has a big stake in this. And Donald Trump is doing wonders for them, which is probably why you see Apple shooting up to its all-near highs again.
Aside from the fact that Buffett, well, I don't know if he's still buying. We won't find out till this quarterly report. But if you don't mind, I'm going to use that for the recap, and we'll just go ahead and keep it in. But two things, as you were talking, I'm like, oh, I never thought about that. Everything you said about the dividend stocks is true, but I forgot that during a correction, if you pay attention, you can actually look this up. Look up PayPal, Square, all the stocks, Facebook that did not pay a dividend. What happened during the correction of October? Yeah, they went extremely far down. Yeah, but look at Disney, Visa, MasterCard. Look at all the ones that pay a dividend. And when you study the financials, you can see why. Like Vanguard is usually the largest shareholder of all those stocks. If they're getting, I think I looked it up in my notebook, like 3.9 million per quarter just holding the stock.
3.9 billion.
Yeah, they're not going to get rid of it. They have no motivation to get rid of it. I think it's 3.9 billion per year, but it's like so many million per year. Yeah, I had quoted it I quoted it wrong last week, but the billion is correct. I was thinking, I said quarterly, but it's yearly, but it's still like 3 million per quarter, something like that, which turns into so many billions per year. So they have no motivation to get rid of it. They can just hold on to it, and they're collecting billions a year. Compared to Square, they have no motivation to hold that. They're not getting paid. So when they lose, they're losing 50% of their investment. They're like, no, let's, scale back on this. Anyway, I was saying, I never thought, let me just trade options on dividend stocks, because if we have a correction, those stocks might be less likely for me to lose money on. I'm like, duh. As you were talking, I'm like, I never made that connection. Like that could probably just put a small increase in my percentage of win rates if I just stick to trading options or dividend stocks, because they weather corrections a lot better than non-dividend paying stocks. So with that, everybody, welcome to our recap. Sorry, Peter.
No, that's okay.
Everything we're just saying, of course, is for educational, informational purposes. We're two regular guys. Somebody's emailed me. It was like, I can't believe how real you are. I was like, yeah, I don't know. I don't know. It was fake, but yeah, I was like, we're just literally average people. I'm a Wall Street outsider. I've never even been to Wall Street. I have no clue what it looks like. I've been to New York. I've never been to Wall Street. But how average people can still succeed in the market despite what the experts say. Of course, everything we're sharing is for educational, informational purposes. But again, we welcome you to our weekly recap. For those who are new, my name is Trader Travis. That's my partner in profit, Peter. So we're going to get started. Did you have something to say, add on to that, Peter?
I've been to Wall Street, but I think I forgot to take a picture of me standing next to the bull, because that thing is like wicked cool. And that's why I didn't take a picture, because you cannot stand next to the bull by yourself. It's got tons and tons of people around it. I'm not saying you can't. You just can't. It's just packed.
So is the bull Wall Street? Because I have been by the bull.
Yeah, it's down right near Wall Street.
Okay, then I have been there. Maybe I was thinking the stock exchange. I've never visited the stock exchange.
I've never been in there.
Okay, because people can do tours. I've never seen what it looks like.
Yeah.
So yeah, I've been in a bull. We have, because I remember my son making a comment about it. Isn't his genitals hanging out or something? They're like huge. Yeah, because they were kids. They were little babies. And they said, kids say anything out their mouth. That's the only reason I remember that.
There was actually someone on top of it when we were there. The police were coming. Someone actually climbed up on top of it, wanted to get a picture. I think they were foreigners. I don't think they were from the country, and didn't realize you can't just go ahead and climb up on that, just like we can't go climb on the Leaning Tower of Pisa if you're from Italy. So but it was interesting. I wanted to get a picture next to it, but when you see in the movies, it's all by itself. There's hardly anyone around.
Yeah, no.
Not the case every time I've gone to seen it, so
New York is incredibly crowded.
Yeah, all right. It is. So anyway,
you want to start today? I'm not going to end on a happy note today. Tonight might be a tough lesson for people to hear what I have to say. So I don't want to start with that. I don't know if I should end with that either. But we'll go ahead. Go ahead.
Yeah, go ahead. I'm sorry. I keep interrupting you.
You're all super positive. Let's at least start off on a positive note and make everybody happy. So before I depress everybody and make them feel bad.
Okay, so, I'm just sharing my main screen, and I'm going to use Market Club to kind of go through my trades. So last week I did place some trades. I did them on SPY. Macy's, I won't show the charts because there's no need to. I just did a covered call on Macy's. I own 100 shares, so I did a covered call on that. And then I did a bullish spread on Coca-Cola as well. So, so I'm just going to let me just get these things out of the way. You guys can't see this, but I can. It's all the GoToMeeting stuff. So SPY. Back on the 10th, it triggered another green daily. So SPY has just been telling me, you know, the market's been telling me, hey, I don't want to quit yet. One of the things I'm cognizant of, though, with all my trades right now is if you look at when we cycle through all my charts here on Market Club, look at the volume and you'll notice something that is typical in this time frame. But right now I've got, I did price point profits on SPY between September, October. Based it off of that green daily. My exit strategy is still the same. My risk was the same. I did my normal 2% risk. I think it's a little bit less. So I'll exit on a 50% loss or a Market Club red weekly. If I see the red daily come out, I did some back testing of red dailies. If you look at Market Club, if you guys follow Market Club, the reason why I'm not always trigger happy on a red daily on the day of the daily, there's two factors that play into it. If the red daily hits and I'm nearing my 50% loss, then I'll go ahead and use it for my exit. But the other side of it too is I'll look now to what we used to use as the DMA template, and I'll look to prices closing below the 7-day moving average for 2 consecutive days. If I see that one of those days is a little bit up, then I let it play out if I'm not near my 50% loss. And the reason why is as I was back testing this a little bit more, I was noticing that it doesn't always happen, but typically if the red daily hits and then you start to see those closes below, the red weekly kind of comes right after it. So that's kind of how I do it, but I definitely get out on a red weekly or 50% loss. That's how I'm managing that. Again, Macy's, I sold the covered call. Of course, right after I sell it, Macy's decides to turn around and go up. So I will not allow myself to get assigned. So if it goes in the money, I'll buy it back for a small loss, and just when it starts to go down or I have an opportunity, I'll reset. My next one, sorry, here we go, Coca-Cola. I got into Coca-Cola based on this green daily here. Coke has been just kind of, if you look at the really short term, it's just kind of been staggering along. And I'll be honest, on this trade, I may have overestimated the move of Coca-Cola because I sold an in-the-money spread because it was giving me such a great risk reward. In other words, I was getting a 1.5 to 1 risk reward. So in other words, I was risking $1 to make $1.50. And that was a good risk reward for me. I need the stock to move. I needed it to move 8% over 2 months, but the way it's dwindling down in time now, I need it to move about 5% this month, which is probably not going to happen, but that's okay. It's not going to kill me because the risk reward was so worth it. So that's where I'm at. Again, same exit strategies I have with my other ones. I'm bringing up Walmart because this is a trade I'm in. Walmart is a fantastic trade. Look at that stock chart. It's just awesome. It had a red. You see why I don't always use red dailies as my exit. And in this case, it wasn't the time anyway. The red daily triggered and immediately triggered a green weekly or green daily, and this thing has just been going up. Today's a little bit of a down day, mostly because the stock market's down. Again, look at the volume. Volume is kind of falling off, so everything is, you know, my Walmart will most likely, I'll probably get my good till cancel order executed at the 80%. If that happens, my goal is to look to see if Walmart is still kind of just climbing this staircase. And if it is, I'm going to enter more trades, but I'll risk a lot less because we're in the summer months and volume's low. These are my future trades. This is what I'm looking at. I'm looking at McDonald's. I love the fact that, see, I like when reds trigger because it tells me that, hey, the stock might take a little bit of a break. And I actually really love when they pull back because those are optimal entry points when they reverse. But McDonald's is something I'm looking at. The other thing I'm looking at with my McDonald's is the PR template. So I don't use the PR template. I hardly ever use it. So I dusted it off. I have it right here. And I've been following McDonald's with the PR template. And the last 2 times it triggered the PR template, it would have been a winning trade. Now, having said that, it's not guaranteed, obviously, but the PR template is a pretty darn good template. It just requires a lot of patience, something I don't have. That's why I don't use it. So, but I am going to use it on McDonald's. This is a trade I'm looking at to possibly get into. I'll use the PR template. If it triggers, it's probably not going to trigger. So I'll look at Market Club to possibly get an entry signal for that. The other one is Apple. I'm just watching Apple. It's on my long-term watch list, and I took advantage of this last pullback and I made some decent profit, and then I didn't get back into it because I'm a moron. So that's just something I'm paying attention to. But what I'm careful about with Apple is this 220 price point, because it seemed to be resistance for it. If you go all the way back to September, it seemed to be resistance. So I'm going to be cognizant of that. And then Starbucks. Who doesn't love Starbucks? I actually love their Pikes Blend now, so I'm going to do a call out to Starbucks. They got this Pikes Blend, which we don't have very good Dunkin' Donuts down here in the South. We have them, but they're not very good. So I've been drinking Starbucks whenever I go out, and I love their coffee, and their croissants are fantastic. And look at this stock. I don't think you've lost any money on this stock, Travis, because you trade this all the time. I know my brother trades this, and he loves it because it's just a powerhouse stock. If you look at that chart, who wouldn't love that chart? It's not overly aggressive up. It's just up, right? Even when it triggers a red weekly, it doesn't do much. It just goes, it says, no, I'm just going to sit down on the sidelines for a minute, and then I'm going to charge back up again. So Starbucks is on my watch list, and I am not going to enter anything right now because I don't like getting into a trade. I feel like I've already missed the boat. So I'm going to wait for this thing to trigger some reds, and then when it goes back to a green, that's when I'm going to start trading it. Oh, and I had one last thing. I know I've gone longer than usual, but this is one of those kind of exciting point of the week. You kind of brought something up about this, but I wanted to, this was based on a question, a really, really good question from one of our members. How come QQQ and the NASDAQ don't always seem to be aligned when you look at Market Club on those two? And it was a great question that I had to look at it because I'm like, oh yeah, that's true. It doesn't do it. So I did some research. And what I found was QQQ and the NASDAQ, even though QQQ trades off of the NASDAQ, it's not like SPY. So if you watch SPY DIA, they pretty much stay in line with the major index. But QQQ is actually a NASDAQ 100 follower. Yep. So what that means is it's trading the top 100 NASDAQ. NASDAQ has over 3,000 information technology and different stocks in it. But the QQQ only trades the top 100% or top 100 of those now. Right. And then they trade the big boys. The biggest sector of the QQQ is the technology sector. So you got your Apples, Amazon, Facebook, right? Yep. Now, here's another point. This is kind of like, this will be a good one for you YouTube watchers that aren't a part of our club. I'll give you some free $1 million tip, I think you can call it, right, Travis? This is why I don't trade QQQ with Apple, because Apple actually holds 11.25% of the top 10 stocks that are traded on QQQ. So when Apple goes down, guess what happens to QQQ? It tends to want to go down right along with it. So there's a quick stock tip for you.
Double exposure. We had to learn the hard way.
That's right. And that's how I learned it, not by doing the research on why NASDAQ and QQQ don't trade together. I learned it when I saw my Apple trade go down and my QQQ trade went down right along with it. So.
You're like, why did my portfolio lose 10% in 2 weeks? Maybe because I have Apple, Facebook, QQQ all in there. It was Netflix, Amazon. I was like, oh, that's not smart.
No, The FANG stocks, they're great when they do well.
Yeah.
And if you watch CNBC, that's what they always talk about. Oh, I'm in the FANG stocks. But your exposure is like multiplied than what you really wanted it to be. If your exposure was 10%, it's almost like it's 20 to 30% when you trade all the FANG stocks at the same time.
Yep.
So that's it.
All
right. That was my total. I probably went way over, but.
Oh, that's fine. I'll be brief so I can keep our appointment and honor our agreement with your wife.
Okay. I'm making you the presenter. So.
All right, I will share my screen in just 1 second. First, let me talk before I depress you. Let me try to make you laugh so you won't hate me as much. Hold on, let me move this over real quick. All right, so I'm going to share something I've never shared publicly first. But first, thank you, Peter, and everyone else who shops at Starbucks. We are stock owners. You're helping us make money. I appreciate that. I really do, from the bottom of my heart. Two, another thing, I don't know if I've ever talked about this, but I noticed this about Buffett, his shareholder meetings. I'm like, that is so brilliant. If you notice, if you've ever been to one or you see it on TV, look at the vendors he brings there. He brings vendors there where you can buy their candy, you buy their products. They're all stocks and companies he owns, right? So when all these millions of thousands, I don't know how many shareholders they have, come there, they have all these vendors and you can buy all these products. But guess what? They're Buffett shareholders. So when they're buying these company products, it's like one big wealth building club. They're all helping each other get rich, right? Instead of being consumers and spending money at companies they don't own, I'm like, wow, Buffett's promoting the companies he owns, which makes him more money, but it also makes his shareholders more money. I was like, it's actually pretty brilliant. I thought about it. I was like, I've never heard anybody point that out or pay attention to that. It's like, think about that. They're all helping each other get rich, right? It's just like they're all dumping this money into this one big fund and it's just growing bigger and bigger and bigger. But anyway, that's why I proudly talk about our Starbucks more and more. You can go shop there. Hey, if us as members, if we own it, we're just helping each other get rich. Now, with that being said, embarrassing story. Never shared this publicly, but I went to a women's conference a long time ago. I'm looking at the time here. Maybe I'll just end with this because you gave enough content. Went to a women's conference that my sister-in-law was speaking at. And I had a stomach virus, so I had bubble guts, right? So in the middle of the conference, I was like, I really got to go to the bathroom. So I jetted off to the bathroom, and this is one of those ones where you can't wait, right? So I jetted off, and you had to go so bad, I was really about to use the bathroom on myself, right? And this is going to be totally disgusting. So if anybody doesn't like disgusting, blunt stuff, you better turn this video off now. So anyway, I ran into the bathroom, and I had this really weird intuitive feeling. Something was off. Like the moment I walked in the bathroom, like something's off, but it's like I couldn't figure out what it was. I just shook it off because I had to go so bad. I was like, whatever. So I just went in the stall real quick, sat down on the toilet, and this is disgusting. Where it's like your body's making all these valves, squirt noises, like that kind of use the bathroom, right? So in the middle of that, somebody comes in the bathroom, a group of people come in the bathroom. I guess the conference had a break or whatever. And so in the middle of me making these foul, disgusting noises, two people sit down on stalls on each side of me. One's wearing a toe ring. The other one on the had their toenails painted pink. And that's when I realized why I had this weird feeling when I walked in the bathroom. My subconscious realized it was the female's bathroom, but my conscious mind didn't pay attention to it. And if you've never been to a male's bathroom, we have urinals. And that's what my subconscious had picked up on. This bathroom has no urinals. It just has stalls. But I didn't really consciously check that. So I literally was in there pooping in the female's bathroom, and a group of females came in. Here I am in my male church Sunday shoes because I was dressed up in like suit pants, right? I'm in some men's church like dress shoes, right? And these girls are wearing flip-flops beside me. One was a toe ring, one had her nails painted. And I'm like, oh my gosh. And like you can see each other's feet. So they're probably like, what the heck is going on, right? So I was like, gosh. And I was like, and I can't get out, right? Because these other ladies are there washing their hands. I was like, I can't run out right now because they're going to see I'm a guy. And it was so embarrassing. You know, the stalls have like a gap. You can see in them. So this lady was washing her hands, and I could see her leaning in the mirror and doing this. She could see me. And so she was like peeking in and trying to see me, and I just put my head down. I was like, oh my gosh, just hurry up, lady, get out of here. So I had to wait until the bathroom cleared and then like scurry out of there. And I was so embarrassed. I didn't go back to the conference because I knew these were girls who was in the conference. I was like, I texted my wife. I was like, oh my gosh. I texted her what happened. I was like, I am not going back to the conference because those ladies will see me and be like, that guy just went in the girls' bathroom. And I've never shared that publicly. That was like the far most embarrassing thing that has ever happened to me. So anyway. So pay attention from now on, guys. So
as soon as you said you ran in and had this feeling, I'm like, I wanted to say it. You didn't see urinals, did you?
No, I did. And I didn't pick up on that. I had to go so bad, man. I was like, oh my gosh. Yeah, never again. Anyway, so with that Sherry story, now let me move on to Jekyll and Hyde. I'm going to switch personalities on you right quick. Can you see my chart, Peter?
Yes, I can.
I have 2 minutes. Tell your wife, I apologize for running. It would be my fault now because we had a time. So when we get off, just make sure you apologize, sir. It's my fault today.
No worries.
All right. So I'm going to call this Tough Love Tuesday. We're recording this on Tuesday. Maybe you can consider it Tough Love Thursday if you watch this on Thursday. But it's going to be hard for a lot of people to hear, but you need to hear this truth because it's based on life. And you need to hear this truth to help you push forward in life. The topic of this lesson is life doesn't care about your excuses. You're looking at a chart real quick, and this is the S&P 500. It's gone up roughly about 22% in 2 years. However, our modeled account that we use in the Success Academy in that same time frame has had about a 403% increase. I started with 10 grand 2 years ago, and now it has a 403% increase. Not all of that is investment performance. I'll show you the breakdown here in a second. All right, so market went up about 2 years. This model account has gone up about 400%. So 10 grand to about 50 grand in 2 short years. Now, if you want the breakdown here, well, and the reason I say about life doesn't care about your excuses is, let's come back to the chart here. Well, no, we can just look at the performance here because this is what it's based on. All right, I've had a lot happen in these 2 years. A dad dying, my nephew was just born with Down syndromes. I mean, my in-laws moved in with me. My personal life is, my wife was like, she wanted to walk out on the marriage. Oh yeah, it's a lot happened to me in the last 2 years. That's just the tip of the iceberg. I'm not even getting to the minute details of my personal life because it's been completely in shambles for 2 years, right? So I've had a lot going on, but life doesn't care about your excuses. It's Warren Buffett, Bill Gates, who else wrote down? Jeff Bezos. Are they slowing down in life? Are they saying, hey, Travis' stepdad just died. Let's slow down so he can catch up to us, right? We don't want to get ahead because Travis is going through a lot. Let's slow down so we don't build wealth and pull ahead of him even more. Are they? No. Does people stop getting rich when I have issues in my personal life? Do people stop getting rich when I have issues? No. Life doesn't care about my excuses. I was telling Peter I'm a pretty unapologetic hard ASS on this subject is because I realize this hard truth about life is that you either show up or you get left behind. And so if I truly care about you and want to be a good leader, then I have to design my programs the way life works. Yes, I have empathy, and a demonstration of that is that in the program, I say, hey, life will get in the way. It happens to us all. You're going to lose money. You know, I cover all these different things that's going to happen to you because it's happened to me. And then I show you what to do when that happens. That's the empathy. But the fact of the matter is I still have to structure the program as you show up or get left behind. I am not going to wait for you to catch up. People say, oh, it's hard for me to follow what you're doing. And the first question I have to ask is why? Are you showing up every day? Are you watching 100% of the videos I put out when I put them out? And then if you have questions, if it's confusing after you watch it, are you asking clarification questions? Or are you kind of not showing up, watching the videos when you get time? No, we have to make time, right? You're not making time. And then, yeah, it's hard because you're like 6 months of trades you've missed out on. But regardless, I don't know why, but I do know life doesn't care about our excuses. You either show up or you get left behind. Now, let's come back here to the program. I told you I would break out the performance here. All right. So your inaction has a cost. Your not showing up has a cost. And I want to quantify it. So this is our model portfolio. Start with 10 grand, 2 short years. It had a 403% increase. So this is the breakdown. So personal contributions is 111% of that, 403%. So I contributed about 11 grand myself, spread out over 2 years. I didn't dump 11 grand. I literally modeled what my wife and I went through. We tried to get out of debt. At first, we only can contribute. I think I started with like $100 extra we contributed to the account. Once we paid off a debt, we then rolled that into the trading account. Then it went to 2, 3. Now it's up to the point where we're contributing 600, and that's the process we follow. So in those 2 years, I contributed 11 grand. The rest is investment performance. Remember, the market itself in 2 years has gone up only about 22%. The investment performance is 292%. And the reason I'm showing this is I said your inaction has a cost, and I want to quantify it. This is the equivalent. I didn't add personal contributions, just as 292% investment performance. If you had showed up diligently, like I have my own excuses, and I have to devote triple the time it takes for you to watch a video because I have to record it, edit it, then release it. So I'm investing triple the time to produce the content, and that's on top of the stuff that's going on in my own personal life, right? So I could use the excuse of no time, but I realize life doesn't care about my excuses. So let me quantify inaction. If you had diligently followed me and been a diligent student and made sure you understood everything I was doing as I was doing it, your 150 grand account could have turned into $500,000. I've already shown you how to take 10 grand and turn it into 50 grand in 2 years. Well, that's the equivalent of 150 turned into $500,000. If you started with 350, that's 350 turned into 1.3 million. So I could have helped you become a millionaire in 2 years if you had followed with me lock and step. And this is including my embarrassing losing trades in 2018. Of course, I had a positive performance in 2018, but I still lost money. And it was an emotional wreck towards the end, right? But it still wound up pulling through. So that includes all of that, right? This is not picture perfect candy coating. Travis always makes money. No, if you've watched me these 2 years, I've had some embarrassing mistakes, but we pull through it. We keep showing up. That's what we have to do. So I have here at the bottom here that I showed you 2 paths. If you have been practicing diligently, I showed you 2 paths. The path to start, you could have been practicing. You're like, Travis, I just started. I'm just new. There's no way in the world I can do what you do. That's true. But you could have practiced on paper and then added money to your account like I showed you, 100 at a time, 200, and then followed the get out of debt plan that I lay out in the program, the same plan we follow. Guess what? That's the path to start. 2 years later now, you could have an 11 grand account and then start your own 5-year retirement plan. The second path I showed you is the path to grow an account. I grew 10 grand to 50 grand, but you could have grew your 150 to $500,000 or your 300 grand account to 1.3 million. So I wanted to share this truth that don't think your inaction doesn't have a cost. It does. If I don't show up, Buffett gets richer. I won't say can't. Most likely I'll never catch up with the Buffett, but I realize that they're not waiting on me. They don't care what goes on in my life. And success, the world of success doesn't either. I either show up or I get left behind, and that applies to you too. So if you wonder, I'm never going to slow down. As a leader, I have to make you step up to a better version of yourself versus me stopping and then trying to go down to your level so you can keep up. No, that doesn't help anybody. As a leader, I have to make sure I always force you to step up to a higher level, say, hey, and then reach back, hey, let me give you a helping hand up. That I will do. Peter and I always do that. If you have trouble trades, we always are there to assist you. We're never turning our back on you, but we are moving forward with our hand back saying, hey, come along with us if you want. But if you don't grab our hand, there's nothing we can do. So anyway, I just wanted to show that today. Again, the theme is your inaction has a cost. Life doesn't care about your excuses. So that's your Tough Love Tuesday lesson for the day. And with that, we got to go 5 minutes over our time limit. Hey, you all take care. We see you in next week's recap. All right. Bye-bye. Bye-bye. All right,
so
buddy.
that's cool because one of the things I was going to cover on our live call, because I didn't want to cover it here because I'm really trying to be more mindful. This is my tip that this is what I wrote down in my trade journal. I'm mindful that we're in the summer and the volumes have been lower across the board, so that's something I keep in mind. best advice is to limit your risk during the summer. Take what you can get when opportunities present themselves. If you didn't take advantage of the market early in the year, as Travis did, just put that on your to-do list for next year. Don't push a bad position and lose money. Missed profits won't hurt you, losses will. Because that was
good.
Right? So because I'm in that boat, I didn't take full advantage of the market in the beginning when you did. I half-assed it, and I didn't lose any money, but I didn't. Surely I didn't reap a lot of benefits I could have reaped, right?
Yeah.
But I'm not pushing that now, because that's typically what I would try to do. All right, push trades, push trades. Yeah. And so now that's just on my to-do list. Okay. The last point, and probably what I'm going to gear the trading on, or the training on, is how I had to take where I was confused. Because when you asked me about your spreadsheet, the spreadsheet, it's not confusing to me, but it takes me a long time to figure out what's going on if I don't look at the spreadsheet every week.
Yep.
I'm not looking at, and I'm not watching your video every single week. It's easy to get lost. Just like if we're driving from here to Florida and I fall asleep halfway through the trip and wake up, okay, I know I'm on 95, but I have no idea where I'm at.
Yeah.
Right?
Yeah. That's true.
Kind of the same thing. So for me, if I'm losing my ability to be profitable, then I'm going to follow this verbatim. But if I've already implemented the homework assignments several times over, let's say on credit spreads, and I understand them, then I don't have to necessarily follow you in this direction, because I'm making money. I know what I'm doing.
Yeah.
So I think that's the other piece to the puzzle for people, that you don't need to have everything Travis has to be successful, because I don't have everything you have. And I've created kind of my own spreadsheet, or my own way of doing things, because my brain works a little different than yours.
Yeah.
So but the number one factor, the number one most important ingredient in this whole recipe is you have to be in the kitchen.
I like that. Yeah, that's true.
Right?
Yeah.
It does. So, and that's what's been missing for me. I know all the strategies. I have my book. I've got my book. I know everything. So I don't know everything, but I know where to go for everything. So
yeah.
Anyway, I'm sorry.
You can tell who's in the kitchen, even if they're not cooking a meal, they're catching the crumbs. And I don't mean that in a condescending way, like the crumbs, i.e. Walmart, Starbucks. I'm noticing people who are in the kitchen because they're following some of these stocks and like, thanks for the Walmart trade. I'm like, hey, that's what we're here for. Again, we're all here to build wealth together.